From the NASDAQ market site, I'm Jill Malandrino for The Street with Henry Schwartz of Trade Alert. We are on day 9 of the government shutdown, and we finally got what you termed VIXplosion. We finally got that spike in volatility.
We did. I mean, it's you know, that first day it was kind of so surreal. The market went up, and really not much was going on. But you know, I mean, over the last few days, things have really, people started to freak out a little bit. You know, you're starting to see it. You know, VIX above 21 now.
Right.
You know, it was at 13 a few weeks ago, and everybody was like, "Yeah, this is fine. Yeah, this is about right," because realized vol's only 9-10. So yesterday we saw 1.8 million VIX option contracts trade, which is insane, which is 27% above the previous record. I mean, we're way above 2008 volume levels, and then today VXX, which is basically kind of an ETF that's similar to VIX in that it uses the VIX futures. Is on fire as well. And we saw a spread trade with, I think it was 250,000 contracts in a package. So what you're seeing is a lot of professionals, basically going straight to the volatility products, whether their position is, they think that 21 is a great level to sell.
Right.
Or whether they're starting to freak out and they want to own this volatility.
But if you look at it over the past 3 years, we're still historically at relatively low levels.
Well, but 08 was 08, 09 was kind of a freaky period. I mean, basically VIX kind of tends to hang out around 14, 15, 16. Especially, in my view, a lot of it is the way that the markets have structurally evolved and technology has evolved.
Right.
You have a lot more quick dissemination of information. There's not as many shocks to the market.
Right.
Okay, so right now you have a very funky situation with the government, and that's really why you're seeing this two-sided action. And I don't think it's going to go away anytime soon. That said, the longer dated VIX, the term structure now goes like this.
Right.
For years it was like this, okay, where the front end was just dirt cheap versus the back end. Now you finally have this backward dated term structure, which is one of the reasons people got into the VXX, because it changes the whole dynamic of that product, which basically pays a penalty to roll from these high front futures. From the low front futures to the higher back futures. So now they're actually taking in a credit every day, basically. Right.
So then, would it make sense to sell at this point? Because if you do take a look at the structure, what is it implying going out, that they're expecting volatility to come back in?
I would rather be a seller at this level.
Right.
At the same time, as I was on my way up here, I was thinking back to a conversation I had in 08, in early 08, okay, before Bear, on the JP Morgan trading desk, and VIX was starting to get up towards 20. And everybody was like, well, do you think it's going to go back down to 15 or 25? And as we started to get up towards 25, 30, very quickly, I asked a trader there, I'm like, do you think we're going to, do you think this is the greatest level ever to sell? And he said, dude, I think we're going to see 45.
Right.
And we touched 70, for a couple freaky weeks later that year. So, VIX is a mean reverting, volatility is mean reverting. So if you have unlimited pockets, you can, it's probably an okay short. But the problem is nobody has unlimited funds.
Of course.
And kind of goes back to that whole the market can stay irrational longer than you can stay liquid. And I would rather be a seller at this level, because I think what we're going to end up getting is some sort of fix out of Washington. The market is going to rally, although I don't think we're really going to get that much of a rally, because I think at this point people are pissed. But I do think volatility is going to basically get damped back down.
But now, speaking of that, we were expecting a government resolution at some point. But let's focus on earnings, because that's really what's going to count. Not only is you getting the final quarter of the year, calendar quarter of the year, you're also going to get a look into 2014. But let's take a look at options flow. One thing that you noticed was Micron going into, they're printing tomorrow, and we've seen some incredible bullish options flow on it.
Yeah, that's the whole thing is, all the news is on Washington, and we're right in the middle of earnings season.
And there's amazing pockets out there to pick from.
Exactly, and you know what we saw actually today, and then I'll come to Micron, is a bunch of energy names. We saw somebody getting long Chevron and short Exxon. And when the market starts to get crazy and things really start moving, that's opportunity. That's opportunity for kind of people to take a look and say, you know what, I know everything's getting a little bit nutty right here, but I like this stock and I like it over this stock. And so things get out of whack, basically, and that creates some opportunity. But yeah, you have I looked at it this morning. I think we have about 150 earnings over the next couple weeks. Micron is tomorrow after the close. Okay, ticker MU. That stock has been on fire this year, up from like $7 in spring to $18 a couple days ago. The call volume has been crazy, particularly on the January 18 calls. Just lots of call buyers, all the way up. So This seems to set up for a bullish play into the number tomorrow night. The average move after earnings for Micron over the last 8 quarters has been around 7%. The straddle's trading around 9%. Okay, the Friday at $18 straddle. So I think we're going to see a move around 8-9%, and I think it's going to be to the upside just based on what I've seen in this $18 strike.
Okay, well, we'll certainly be looking for the follow-up, and you can always get more of Henry's options flow analysis on optionsprofits.com and, of course, on tradealert.com.